Good day, everybody. I hope you had a great 4th of July with your friends and your family, and I hope you got a great weekend planned ahead. So in this week's report of what's happened in this past week, certainly is not what we expected or hoped that we were hoping from last week. We were hoping that rates would have improved a little bit this week, but the reality is they just continue to get worse and worse, and when we didn't think they could get any worse, they got worse and worser. And so why is this happening? Well, the reality is we just have to step back and we have to look at the big picture. The big picture is that we live in a world where people react and respond. Human beings who are trading bonds and stocks and commodities, they are responding to headlines. I mean, think about it. If Apple stock claims that they're going to make $1 million in their earnings, and then they come out with their earnings report and it's $2 million, guess what's going to happen? Traders are going to go out in droves and buy the stock up, and the price is going to go up immediately within minutes. But then you start reading the details and the foundation and the fundamentals of the company, and you realize maybe they did some things that are unhealthy to the company to get there, then you start selling the stock. And you have to just kind of look at that from that standpoint. It's really difficult to day trade mortgage rates, especially in this volatile market. So how did we get here? Why are rates continuing to rise in the last couple of weeks when we know that foundationally or fundamentally that inflation is dropping, that we are going into a recession, that we have inversion in the 2-year and the 10-year. All the foundation or fundamental aspects are in play for rates to come down. So why are rates going up? It's because of the reaction effect. Last week, the jobless reports came out, and it showed that jobless report wasn't, or the jobless claims weren't as bad as we were anticipating, but we also knew that that was probably understated. Nobody really gave it time to marinate. We now know that is definitely the case. We saw in this week's ADP report that, again, was showing stronger numbers than what people anticipated. Well, today, the BLS job report showed that all of that, when you look at all the details and all the levels of that the job market is not as strong as the media or as people want it to be. And so the net effect of that is that now today, in today's market, mortgage rates are dropping. The bond market is in our favor today. It's actually a good day for a change from all the negativity that we've seen. It reminds me of a devotion that I did a few weeks back when Paul wrote his letter to the people of Galatia. If you remember in the book of Galatians that there were a lot of false teachers that were teaching new converts that yes, you can accept your Christianity, but you also have to carry this Mosaic law, this Judaism with you. You have to continue to do all these things. And they kind of lost sight of the fundamentals of their faith in that. And so Paul had to remind them of that. And we as real estate professionals have to be like Paul. We have to keep our buyers and our clients focused on the fundamentals and what is important in the market. And that is not to listen to all the falsities, not to listen to all the headlines and all the noise that's out there. Focus on the foundation of why should you buy a house? Should I wait for rates to drop or not? Think about it. For the history of real estate market, in every 10-year increment, every decade, that asset class has increased from 70% to even 260% in some decades, even when the rates were as high as 18% in the 1980s. So we have to remain our focus and keep our focus and make sure that our clients are focused on the fundamentals of that and not look at all the headlines and not listen to all the negativity. The reality is that it is still good time to buy a house. Now, be patient with inventory, find the right one, but don't be patient to try to pick and choose where the rate's going to be. Remember, marry the house, date the rate. Something else that I want to just reiterate as real estate professionals is we have to be focused on our goal versus expectation. If you are listing a house to put on the market, what is your goal? And so you might say, well, my goal is to sell the house as quick as possible for as much money as possible. Well, that's the expectation, right? Just like when you give us as loan officers a contract, what's our goal? Well, our goal shouldn't be to close on time. That's everybody's expectation. So you have to be thinking about what are the steps that you have to make the expectation happen. Those steps are your goal. That's what you should be focused on. And so for us, when we get a contract, our goal is what's internally known as a 24-hour shot clock. There are levels of things that have to be done within 24 hours because our goal is to be clear to close in 10 days, right? Your expectation is for it to be on time in 30 days. Why am I mentioning all this? Is because our goal and our conversations with consumers and with potential buyers and borrowers out there must be to stay focused on the fundamentals. And the fundamentals are that it's always a good time to buy a house. Housing prices are going to go up in the long run, not to focus on the day-to-day, but to focus on the big picture. I can't predict what interest rates are going to be next week or the following week. Now, I can tell you there's really good fundamental information showing that interest rates are going to drop over the long term. Why do I know that? Because, again, in the foundations of the economy, we see GDP slowing, we see the economy slowing, we see inflation is coming down. And hopefully some of that will be played out in the reports that we're talking about next week, the CPI report next week. Hopefully we'll drop that information and the bonds will respond very favorably next week, but I can't predict that they'll do that in one day, but in time it's gonna happen. So let's keep our focus, let's keep our clients focused on the foundation and the fundamentals. That is our focus, that's our goal. And if you'll do that, keep people calm and make sure they're focused on what's important and not all the noise. So you guys have a great weekend. We're here for you. Anytime you need us, give us a call.